Hey everyone, welcome back to another episode of Stock Talk with David. And I'm David. Today's episode, we're just recording what one of our meetings or one of our market updates look like. Typically, we'll do these on Sundays. However, things just worked out to where we're going to be doing it this week, Monday. And so, a couple hours past market open. First thing I really wanted to talk about was just the Middle East and kind of just understanding that it is very uncertain right now what's happening. We've got Israel, Palestine clashing, Iran's in the background, all these things, right? Asia, China, Taiwan, India, just a lot going on in that part of the world. And it is very uncertain. Different ways to play it, different markets are affected, commodities, financials, things like that. So we'll talk about that furthermore in like some of the stocks that we like to play these ideas. Moving into energy, right now we know that if we look at crude oil, which I'll pull up right now. So pulling up the crude oil, you can just see that it's been a slow grind to get all the way to where it is right now. It's been consolidating. However, I think we're about to see another push up, right? It just makes sense based off of the technicals, knowing what's happened with the pipeline, knowing what's happened with Goldman coming out and saying, hey, we're going to be paying $80, $90 for a barrel of oil, in the next 1 to 3 months, basically summertime. We know that commodities have gone absolutely crazy. The price of wood is insane. I think this number I saw was you can build like 8 houses with the price of wood that it is today, and then now you can only build like 2 houses, right? So just massive price movement there in those markets. I think it's a good indicator of demand. It's saying, hey, we had a giant sell off. Things are picking back up. I think the market's priced in a little bit heavy. So I think it's a good indicator to say, that asset prices, they are inflating. However, I wouldn't be surprised if we saw a pullback and maybe some return to normalization. But at the end of the day, the prices, in my opinion, will still be pretty elevated. So I think that makes sense. Uh, Moving into some of the sectors, we know that right now we pull up futures for S&P 500, and we'll make it a little bit easier to see here on the view. Cool. So last week we got this big dip right here. We were at about 42 and some change. We got this big dip, fell all the way down to right about 4, which is 5-10% pullback off of that, which in the long term that's actually good for the market because it allows us to catch a breather, kind of assess what plays are going to be good, understanding rotation, things like that. And we've definitely climbed back up. So I think that's a very valid support there at 4,000. I'm really interested to see what's going to happen in this next week. We know that the CDC has come out and said that we don't have to wear a mask anymore. Typically, don't have to wear a mask if you've been vaccinated. Vaccination numbers are kind of steadying off. So I think that's going to be interesting. It does add a lot of optimism to the market. And then another thing I wanted to talk about too are bonds. So I'm going to pull up what the 10-year yield is doing. And right now we're at 1.63 and some change. And we know that about 6 months ago, 3 months ago, the chart will load, we hit 1.7, and that completely just pulled back a lot of the tech space, a lot of the companies, these growth companies that had absolutely zero earnings. And it really forced people back into value. And so it's been this slow grind, every couple of days where we see value doing well, then it's growth, and value doing well, and then it's growth. And it has consolidated the market, push it up to highs very, very slowly. This is the first big pullback. And so I think the thing to keep the eye on is as long as the bonds don't shoot up very, very quick, they could hit 2% yield and we'd still be okay. But if they get a really quick run up, that's when I would start to be concerned. And so very quickly, the stock that we like, this ties in really nice, is Wells Fargo. And Wells Fargo, we've been really, really long on Wells since about December. So right in here at about 28. $25, and so we're nearly at 100% growth with Wells, which has been great. But they make their money off of higher interest rates and higher interest they can charge back to their customers. We know Wells almost like a growth story with the restructuring of their company, especially after their big deceitful sales practices in 2015 and 2016. And so if you've been in the Stock Talk group, we've talked tirelessly about this one. Another one that we like talking about oil is ExxonMobil. You could not give this away a year ago, or even 7, 8 months ago. And now it seems like it is just absolutely taking off. I like them because they're one of the bigger oil companies, and so they can more easily make the move into ESG practices and things like that. But they're also upstream, so as oil becomes more expensive, they do make more money, kind of like Wells. And then as we talk about tensions in the Middle East, Raytheon, we've been long in Raytheon since about February at about 69, $70 right in there. And now we're up pretty big in it. So that's been a nice one. It plays off of the aerospace and defense side, so the uncertainty with the Middle East again. And they also have exposure to consumer products, or more the consumer and leisure travel, as far as building engines, chips, things like this for Boeing and these larger airlines, right? And so that's pretty nice. And then last one that I want to talk about is MRK, which is Merck. Basically, they do pharmaceuticals. They compete right there with Johnson and Johnson, Pfizer, AZN, all of those guys, right? And what's been really nice about Merck is that they've pulled back a ton, and so they're up here around 85, $90, and this year they've come down. But what's really optimistic about them, and the big catalyst we're looking for, is that over 70% of their pharmaceutical sales have to be physician administered, meaning if you're going to receive a product from Merck, your physician has to give it to you. And we're talking, cancer treatments, vaccines, things like that, right? That a doctor would have to give you. And so right now we're starting to see a return to normalcy. We're seeing the mask mandate lifted, things like that. That's going to shoot this price up. And I wouldn't be surprised if it were to hit anywhere from 95 to $100 next, 3 to 6 months, right? So that's something that we've talked a lot about these. Again, just wanted to run through some of the news and then some of the recaps that we've been talking about every single week. So if you guys like that, awesome. Please like, subscribe, and look forward to updating all the guys soon on some more plays. Thanks a lot.